Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you all to another promising and insightful edition of the Forex Morning Mastery. And today happens to be Wednesday, the third trading day of the week, and of course the beginning of the second half of the week. And today we are going to be reviewing how well this asset we have been monitoring so far this week has been doing, and of course use the historical data we can find on the chart coupled with the fundamental factors behind the scenes to strategically position ourselves for the next move. My own name is Sheriff Daramola, and for the next 40 minutes thereabout, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. So far this week, we have been monitoring about three financial instruments on our watch list, which includes the USOILSPOT, the GBPUSD, and the favorite amongst them all, the XAUUSD. Though we have been struggling across two of these assets, which includes the USOILSPOT, though we still have a buy position running on that particular asset, but it's still not doing very well at this point in time as it's still running in negative territories. Then for the GBPUSD, we had a loss during the course of the week on that asset, and that asset is still showing signs of extended sideways trading activities, which further cast a shadow of doubt on the possibility that the pound sterling will gain momentum this week despite the positive economic data that came in this morning. The only asset that has been doing very well on our watch list has been the XAUUSD. We've had some interesting good positions through the course of the week. We are going to be looking at that again today and see how we will be positioning ourselves for the next move. So I encourage us all to stay tuned in so that we do not miss out on the ideas we shall be sharing this morning, as I have done behind the scenes a comprehensive analysis on all of these assets we are going to be looking at. And in fact, if you are with me on both my TradingView and Telegram platform, you must have gotten an update as to what we will be looking out for today. So we will be expatiating on that, and let's see how we will be planning for today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. I know you will be wondering, what is the Forex Morning Mastery all about? What is it that we do here on the Forex Morning Mastery? Well, following my weekend videos where I give an insight into what my plans are for the new week, we come here 3 times in a week to do real-time monitoring and review of our positions. So we're always here on Mondays, Wednesdays, and Fridays. So the purpose here is to we gather here as a community, of course, in preparation of both the London and the New York session, and my aim here is to equip you all with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually will result in you enhancing your own trading decisions and strategies, and of course, above all, make your own decisions independently. So once again, I do extend a warm welcome to you and encourage you to actively engage in the comment section, and do not forget to give the video a thumbs up if you have found the content beneficial in any way. So with that being said, here we shall be diving right into the business for the day. I see your comment C40. Good morning to you. Glad to have you around with us this morning. The first thing we normally do is to keep tabs with the fundamental factors behind the scenes, which obviously will be influencing the sentiment in the market today. And what we normally do here is to check on the economic calendar, and the purpose of doing this is to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, of course, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring so far this week, we are going to be focusing on high impactful event from both the United States and the United Kingdom economic docket. And for this, we do not have any high impactful event. We usually include mid-tier economic features so that we can have a broader view into what will likely be driving the sentiment in the market. So far this week, we've had some interesting events so far this week, from speeches from both the United States and the United Kingdom. We also had the retail sales data coming in from the United States on Monday, and of course the data came in higher than expected to further emphasize the resilient nature of the United States economic docket. Then we also had the speech from the Federal Reserve Chairman yesterday, which further gave market participants an insight into what the Fed monetary policymakers are looking at. And one of the key highlights I can come up with from the Fed Chairman's speech yesterday was the fact that he did acknowledge that inflation is still high in the United States, and that will still need some time before any decisions of cutting interest rate will happen. Now, this has further tilted the bet to favor a higher interest rate for an extended period of time, and we all know how this influenced the US dollar, as the higher interest rate for an extended period of time will favor the US Treasury bond yield, and we all know how interrelated the US Treasury bond yield is with the US dollar. Now, everyone in the market now is looking forward to dollar continue to rise, and as a result of this, we are going to be taking all other factors into play, both from technical and fundamental standpoint, to decide how we will be positioning ourselves for the next move. Now, in addition to that, we also witnessed some other speeches from the Bank of England's governor, that's Andrew Bailey's, yesterday as well, and he also went on to emphasize the inflationary status of the United Kingdom. And right now, majority are banking that the Bank of England might leave interest rate unchanged during their next policy meeting. Now, this morning we had a couple of events from the United Kingdom, which obviously is expected to influence our GBPUSD chart. So today we were able to see the consumer pricing index from the United Kingdom economy. Now, for those who don't know, the CPI data is a measure that examines the average change in prices paid by consumers for goods and services over time, and a higher than expected CPI data can lead to concerns about inflation impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. Now, if we look at the CPI data that came in from the United Kingdom this morning, you will see that the data came in higher than what market participants were expecting. Look at what we were looking at here. We were looking at 3.1% and 4.1% respectively for the year-on-year on the consumer price index. Lo and behold, the data came in 3.2 and 4.2%, higher than market expectation, but a little bit lower than the previous month data. Now, what does this tell us? It tells us that inflation is still sticky in the United Kingdom, which brings up the idea that we might be seeing a situation where interest rate will be left higher for an extended period of time. Now, what is the implication of higher interest rate on the pound sterling? Well, the pound sterling will attract some buying potential due to this fact, that is the return on investment difference. That is, if interest rate is kept higher, then that means that if you invest in the pound sterling, you tend to gain more from that transaction. So we should be expecting price of the pound sterling to rise today. But if we consider the other side of the pond, which is the United States, which also are expected to extend higher interest rate for maintain interest rate for an extended period of time, we may likely see a market condition that is imbalanced due to the fact that the interest rate on the US dollar is a little bit higher than the pound sterling. So we are going to be looking at how the market has reacted to this event via what we see on the charts in a moment. So stay tuned in on that one. Then later today we are going to be looking at a couple of other high impactful events, one of which is the Bank of England's governor's speech, which is coming up later today. Then we also have some speeches from the United States too as well. We have Fed Beige book, we have Mester, and we also have Askel from the United Kingdom as well. And then we also have Green speech also from the United Kingdom. So we have about 5 speeches we are looking forward to much more later. 6 speeches we are looking forward to much more later today. And one of the importance of these speeches, the major importance of the speeches is that it helps us, retailers and market participants, to have an insight into the monetary policy outlook of these economies, and of course give us an insight into the economic situation, the health condition of the economic situation, and what is likely going to be the trajectory of interest rate decision for the year. So everyone will be looking forward to what these officials will be saying today to have an insight into how to plan for the remainder part of the week. So these are the events we are looking forward to today, and as technical traders we do understand that the anticipation of this event has a way of influencing the sentiment in the market in such a way that we will be seeing patterns and structures evolve on the chart prior to this event, and then we can use them to strategically position ourselves for the next move. So with that being said, here we shall be diving right into the business, and as usual the first asset we are going to be looking at this morning is going to be the USOILSPOT. And on the USOILSPOT so far this week, we've not really done well on this particular asset. As you will see, that price action has been confined within a range since the beginning of the week to further emphasize the prevailing uncertainty in this particular market. Now, if you are with me on Monday morning when we did a top-down analysis on this asset, we initially saw price action oscillating right around our key level, situated at that psychological level around the $85 area, resulting into a range bound structure where we saw price initially confined within the $85.25 level and the $84.35 area before we now saw an extension of that expansion of that range bound, as you will see, between the $85.60 and of course the $84 area. Now, this uncertainty can be attributed to various factors behind the scenes, and for those of you who saw my commentary this morning, I did highlighted some of the things that may be influencing the sentiment in the market at this point in time. One of them is the hawkish remark from the Federal Reserve Chairman yesterday, which obviously has supported the bearish tone in this particular market. As we all saw, that Powell said indicated that that achieving the central bank's 2% inflation target may take longer than expected, which of course has supported the idea of keeping interest rate higher for an extended period of time. And when interest rate is high, this usually exert downward pressure on oil prices, as it could lead to reduced demand for oil, given the fact that a higher interest rate dovetails to increased cost of holding crude oil commodity. Now, yesterday we also witnessed the report from the American Petroleum Institute, that is API, which they reported a significant increase in US crude oil stockpile for last week, and we were seeing a 4.09 million barrels for the previous week, as against the other week which came in at 3.03 million barrels. Now, what this simply means is that there is an increase in supply and there is no demand to eat into the supply. And our simple economics tells us that when supply is high, definitely we see due to the fact that the commodity is surplus in the market, the price tends to drop to the downside. And if we look at what has been happening in this market in the last 48 to 60 hours, you will see that our bullish traction has been finding it difficult to continue to the upside. As you will see, price has been finding lower highs, lower lows in this particular market. Now, despite this all factors that supports a downtrend situation on the USOILSPOT, we cannot ignore the ongoing geopolitical tensions in the Middle East, especially the recent attack by the Iranian military on the Israeli territory. And of course, in the last 2 days now, we've had how the Israeli authorities have emphasized that they are going to be retaliating. Now, this has further escalated concerns as regards to oil production in this particular area, and we all know how Iran is considered to be one of the highest producer of oil in the world. Now, if Iran gets attacked, this may likely incite some imbalance in the market and concerns as regards to oil supply and oil production, which could result in price soaring to the upside. So all of these factors needs to be taken into consideration. We have factors that support a bearish expectations, and we also have an holistic view into the geopolitical tension, which may stabilize price, and in fact not only stabilize it, push price to the upside. Now, to have an insight into how we will be positioning ourselves for this week, or for today, let me say, we need to see how the market participants have been reacting to both the geopolitical tensions and of course the economic event. Now, going back into our chart, on the 1 hour time frame, it is quite clear that for the past since the beginning of this month of April, after price action tested a new high at the $87 area, price action has been more or less caught in a range bound structure, as you will see a wider range of about $2, that's between the $86 area and of course the $84 level, where the $84 area has continued to serve as a strong barrier, negating all attempt by the sellers to break through. Now, if you look at the structure closely, you will see here on the beginning of this week, we saw that every attempt by the sellers to break through the $84 area was met with strong resistance from the buyers, hereby pushing price to the upside, as you will see here. Now, since the new week has begun, we saw the same thing happen here. Sellers are still finding it difficult to break through this particular area, and as long as price action remains above a demand zone, which is within an uptrend continuation structure, we have no business selling this asset unless that demand zone is broken and retested. Now, at this point in time, our bullish bias still remains very much intact, and for those of us who are yet to capitalize on this opportunity, you can still have your orders placed above the $85 level, which happens to be our key level, and then look out for more opportunities to buy if price action breaks out of the $86 area, and if price continues to climb further, the breakout of the highest point at the $87 level will be welcoming more buy positions for us. So if we are going to be buying the USOILSPOT today, we are still within the buyer's territory. Price still remains above that demand zone. We have around that $84 area. So at this point in time, we're still looking for buying opportunities in this market. Though we had a buy position triggered, remember we had a buy position triggered at the $85 level right here on Monday, but that position is still struggling to gain traction, as we have a situation where the position is still running with about 60 pips loss. So let's see how this is going to play out. Will price continue to the upside, or will this bearish momentum take us out of our buy position to signal a selling opportunity for today? So we maintain a bullish bias, and the only condition that will make us sell the USOILSPOT is for price action to break down and retest the $84 level. Now remember, this level has been a major barrier for sellers since the beginning of this month, And for us to sell, I want to see price break down, not only breaking down the structure, I would like to see a retest of structure, maybe on our 15 minutes time frame, giving me signs that buyers are finding it difficult to climb back above the $84 area before I start selling the US All Spot. Now, the reason why I would need a confirmation to happen here is basically because the breakdown could turn out to be a false breakdown. Look at what happened here on Monday. We saw the same thing happen. We saw a false breakdown happen there, and we don't want to get ourselves caught up in those kind of scenarios. So we'll need some significant confirmation that suggests that price will be going to the downside. So a retest of structure, or let's say the 10 or 15 minutes time frame with continuous selling pressure, will welcome selling opportunities for us. Now, if we get to sell the US All Spot, we need to be very, very careful. Now, the reason why I'm saying this is simply, if we look at the structure we identified on the higher time frame, it's clear that the market has been very bullish in the last couple of months. And remember that we had an ascending trend line on that structure on the higher time frame. Now, if we zoom out and look at the structure closely, you will see that we have this, after connecting the series of higher lows, we have an ascending trend line guiding that bullish momentum. Now, if we get to sell the US All Spot today, that is, if price action breaks down the $84 level, I would suggest that as soon as price action gradually moves towards this ascending trend line, we want to be moving our stop losses, secure some profit from the sell position while we wait and see how the market is going to be reacting to this ascending trend line. So if we see any form of reversal pattern, maybe in the form of a double bottom structure, head and shoulder pattern, whichever case it may be, we'll mark out the neckline of that reversal pattern and then buy the breakout of the neckline. So that means that price action will be respecting that ascending trend line one more time, as it has been doing in the last couple of months. However, if this ascending trend line gets broken to the downside, then this will welcome more opportunities to sell the US All Spot. So these are my simple views on this particular asset for today. So let's see how the market is going to play out. Like I said earlier, though our buy position is still struggling to make some profits, we still maintain a bullish bias due to the fact that price action is still trading above that $84 area, which is known to be a robust demand zone since the beginning of this month. So let's see how the market will play out. Will price sustain itself above the $84 area, or how we're going to be seeing a situation where price will be breaking down the structure? Trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates on this asset as at when due. But I would encourage you all to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So this is my simple view on the US All Spot. If you have any questions whatsoever as regards to my explanation, or you need some further clarity, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in, and do not forget to give the video a thumbs up if you have found this content beneficial. Thank you very much as you do so. Stay tuned in, and I will see you on the other side of the video. So I hope you've marked out these levels accordingly on your chart. They are very, very important, as it helps us to manage our positions today as we prepare for both the London and the New York session. And one of the benefits of marking out your chart is simply because it helps us to reduce any thinking when the market opens. Now, for instance, if you already have your levels marked out on your chart, all you just need to do is position yourselves at the levels you've marked out and then wait, see how the market will behave around that area. And while we're doing this, always remember to have a well-defined risk management strategy in place to protect your portfolio against sudden or unexpected situations. So I see you, C40. Thank you very much for your support. I'm very grateful for that one. Krishna, good morning to you. Namaste from this part of the world. Trust you're doing very well and glad to have you around with us. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next financial instrument on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD. And on the GBPUSD, we hit a stop loss on Monday on this asset. We had a stop loss hit on Monday on this asset, and on Tuesday we had a sell position triggered. And during my commentary yesterday morning, I did emphasize that we should stay out of the current sell position due to the inability of sellers to maintain their stance below the 1.24410 level, and in fact their inability to break down the 1.24 for me was a red flag that buyers may likely be gaining momentum behind the scenes. Now, for those of us who missed out on our sessions on Monday, I will take us through what really happened here on the 1 hour time frame. And if you really want to have an in-depth insight into what we did on the higher time frame, I will encourage you all to watch our video on Monday where I did a top-down analysis on this asset. So due to the limited time I have, I wouldn't be able to go into the top-down analysis, but I will expatiate on the 1 hour time frame, giving us an insight into what we saw that made us to make the decisions we made. So if you had missed out on Monday's session, you can find the link right in the description box of this current video you're watching to keep yourself in touch with what we talked about. So going back into the structure, so at the beginning of the week we had a range bound structure where we saw price action confined within the 1.24650 level and the 1.24410 area at the beginning of the week to emphasize the prevailing uncertainty at that point in time. So for the first 8 hours of the week, it was more of a range bound structure. And you know how we do it in this community. Whenever price action falls into a range like this, we want to exercise patience, waiting for the market to make a decision, which will come in the form of either the breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. Though we had the breakout of the structure happened, I told us all on Monday that for those of us who missed out on that opportunity, let's see if the market will come back and retest the structure, which it did. It came back, retest the structure, continued the momentum, but it didn't last long as we saw price take us out of that buy position in a loss. So that was our first loss for the week. And then we saw price action break down the support line, triggered my sell stop order during the Asian session. And that morning, immediately I noticed this sharp rejection around this area. That is the inability of sellers to settle below the structure. It was a red flag for me. So I mentioned that we move all our stop losses to break even or get out of that position. And I do hope you did as instructed. If you had done so, you must have been able to weight from this bullish traction that came in. Now this morning, while I was reviewing this current market structure, I begin to notice that in the last 24 to 36 hours, sellers have been finding it difficult to continue the momentum. Remember, at the beginning of the week, on the 4 hours time frame, we saw a descending channel which has been supporting the bearish idea in the last 6 to 7 weeks in this market. And of course, we had this descending trend line also in place to further support the idea of the bearish move. And due to this, we were looking at selling opportunities below the structure, but the inability of sellers to maintain traction below the structure. Look at this. Let me show you something here. If you look at the nature of this candle here on Tuesday morning, you'll see we have a sharp rejection. Now look at what happened here as well. Yesterday evening, we saw another sharp rejection around this area, and for me, this is a sign that we may be seeing a build-up in reversal pattern, a reversal setup, in an attempt of continuing the uptrend. And if price goes ahead to break out of this descending trend line, then we have no other choice than to prepare ourselves for buying opportunities. Now, following today's UK macroeconomic data, where we saw the CPI data coming in higher than expected, we saw how the market reacted to this event with a positive stance, as we saw this engulfing bullish candle spring out from this particular area where we said sellers were finding it difficult to continue the momentum. And this, for me, may likely be a signal that will affirm the strength of the buyers at this point in time. And for the fact that price action has broken out and retested that descending trend line, for me, it's a good signal for us to join an uptrend move. So for today's trading activity, the outlook is looking bullish. The path of least resistance for me is looking bullish, and currently I do have a buy position triggered at the 1.24650 level, and I will be advising us to have enough breathing space for price action to move around, as we may likely be seeing some volatility or extended sideways trading activity before the uptrend continuation happens. So we already have a buy position triggered. Ensure you have enough room for price action to breathe. So I'm suggesting anywhere around the 1.24320 area, which dovetails to about 30 pips thereabout, as our stop loss for this particular position. And if price action continues to climb and find new highs, then a breakout of the 1.24875, the highest zone for this week, will be welcoming more buy positions. And of course, we will be looking out for more opportunities to buy at the breakout of our key level for this week, situated at the 1.25350 level. Now, for TP target zones, in as much as I do not want to serve as a signal platform here, let me just give you an insight into what I'm looking at as my TP target, which falls within the 1.265 and the 1.25 zone area. Now, the reason why I have placed my TP target around that zone is basically as a result of the bearish impulsive leg we saw following the CPI data from the United States last week. Remember, we saw this strong impulsive move following the CPI data from the US in favor of the US dollar, bringing price into that area close to the 1.24 area. Now, this old bullish traction we have been observing around the 1.24 area, for me, is considered to be a counter trend opportunity, a short-term buying opportunity, which could be the retracement of that impulsive bearish leg. Now, if we bring out our Fibonacci retracement tool, run it through the impulsive leg, we are looking at an area between the 50 and the 78.6% area, which dovetails to this particular zone. So I'm looking at price coming into this area as my TP target. So this, we are looking at a minimum of about about 100 pips to a maximum of about 190 pips to catch here if price action gets into the zone. Now, if price gets into the TP target zone, that area also will be serving as a sell window, where if I see a reversal pattern like double top structure, something like this, let me give a visual representation. If price comes into this area and we begin to see selling pressure and inability of buyers to continue the momentum, we might be getting ready for the second leg of that bearish move that started last week. So let's see how far this bullish momentum will go. Now, in as much as we are looking out for buying opportunities above that descending trend line we marked out on the higher time frame, we cannot ignore the potentials that the sellers could come in at any point in time. Remember, the US dollar is strong right now, as we all have seen our market participants have started leaning towards interest rate being kept high for an extended period of time, which obviously will favor the US Treasury bond yield and have a ripple effect on the US dollar. Now, if the bearish traction continues and buyers find it difficult to maintain its momentum above that descending trend line and the 1.24650 level, well, the only condition that will make me want to sell the GBPUSD is for this area. Remember, I was telling you about this area which has been serving as a strong resistance for sellers. I would like to see this area broken to the downside before I can start selling the GBPUSD. So if the bullish traction does not suffice, that is the breakout of the descending trend line does not suffice, then a breakdown of the structure will be all we need to join that downtrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update as at when due. So let's see how this is going to play out. Like I said earlier, I already have a buy position triggered. Let's hope that we don't record the second loss on the GBPUSD for this week. But one thing I know is that if we continue and stay faithful with our analytical approach, by the end of the week, we will be able to recoup the losses we incurred and, of course, make some more profit on top of it. So let's stay faithful with the analytical approach. We remain bullish at this point in time. Let's see how far it goes. And if it doesn't go that way, we are prepared to join the bearish move when it finally happens. But I will always give you updates on both my TradingView and Telegram platform. So this is my simple view on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. And I also encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And do not forget to give the video a thumbs up. For those who are clicking on the like button, I really do appreciate your support. And for those who are yet to do so, please do, as this is the cheapest way you can actually support this channel and community to grow. And thank you very much as you do so. So I will be taking the next 5, 10, 15 seconds off. Let's see if there are any questions whatsoever before we move into the final assets on our watch list for today. Stay tuned in. So I see your comment here, Krishna. Krishna says we want Euro USD analysis and that we should include this into our watch list for the week. Okay, I understand where you're coming from, Krishna. And one thing I've talked about this in my previous sessions, that the time that I have only allows me to do 3 assets for the Forex Morning Mastery. I obviously do more than 3 assets personally. I also trade the US Tech 100. I also trade the USD JPY, GBPUSD, depending on whichever, and Euro USD, depending on whichever setup comes promising for me when I do my analysis during the weekend. So this is what we are going to do. So what I will do, so we can only take either the GBPUSD, USD JPY, or Euro USD in addition to the commodity assets, that is the US oil and the XAUUSD. So during the weekend, I will be sharing a poll on both my YouTube and the Telegram platform. I will project the Euro USD, USD JPY, and GBPUSD. So whichever carries the day will be the one we will be treating for next week. So I will try to include it if majority supports the Euro USD Krishna. So let's do it like that. So let's see during the weekend. I will post it and let's see how many people will support Euro USD over the other assets. So I hope I answered that, Krishna. All right. So in the absence of no questions, I'm of the opinion that we are all on the same page, and I can still see that we have only 5 likes and we have over 10 people on board. Please, let's make the like tally with the number of people on board, and thank you very much as you do so. You are very much welcome, Krishna. So moving on to the final asset on our watch list. So the final asset we are going to be looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And the XAUUSD happens to be the most profitable asset amongst the assets we are monitoring so far this week, as we have been buying this asset since the beginning of the week. On Monday, we were able to scoop in a minimum of 300 pips from multiple buy entries. I think we had about 3 buy entries on Monday before the bearish traction resumed. And yesterday as well, we were able to take some buy positions. Let's run through this quickly, what really happened at the beginning of the week that led to the decisions we made. So at the beginning of the week, right here on the 1 hour time frame, we had the key level for the week, which is situated at a 2,335 level. And in fact, you will see how this area since the second week of this month has been a strong demand zone in this market. Now, since price broke above this level, we saw that that area between the 2,335 and the $2,318 level has played a major role in negating all attempt by the sellers to break through that particular area. And in addition to price action sitting above this demand zone, remember on the daily time frame, I think on the 4 hours time frame, we had this ascending trend line, and you know how we use our ascending trend line. As long as price action remains above the ascending trend line, we have no business selling the XAUUSD. So throughout the course of the week, we've not had any cause to consider selling this asset at all, despite the strength of the US dollar. Now, at the beginning of the week, besides these 2 factors I did identify here, we saw how price action was initially confined within the range of the $2,372 level and the $2,346.50 area to emphasize the prevailing uncertainty at the beginning of the week. Now, after noticing this sharp rejection of our support line for the week, which obviously is sitting above our demand zone, I was of the opinion that buyers may likely be gaining traction anytime soon. And as a result of this, if you are with me on my TradingView and Telegram platform, I did updated us, and of course on the XAUUSD live session, I did updated us with a 15 minutes time frame where I had a structural update ensuring that we can capitalize on the breakout of the $2,353 dollar area. So we had the privilege of joining this. We added more positions at the breakout of the $2,361.50 level, and then added more at the breakout of the $2,372 area. So as at Monday, we were able to scoop in over 300 pips before the bearish momentum happened. Now, during our live session, during our commentary on Tuesday, I told us that we will be looking out for reversal setup, as we saw here, to join the uptrend move. And look at what happened here. Price came back down, buy pressure resumed again, price dropped back down again, and we had another opportunity to buy at a 2,372. Had the privilege of adding more position at the 2,388, and I did updated that we move our stop losses, secure the position, and if you had done so, you must have been taken out with a reasonable amount of profit on that one. Now, as at this morning, while I was giving my commentary and update, I did tell us that we have all our buy positions closed, and I did updated that we will be looking out for more buying opportunities. Now, in that commentary, I also went on to talk about, to give an highlight into what the US Federal Reserve Chairman said during his speech at the Wilson Center in Washington, D.C. yesterday, where he managed the market expectations surrounding potential interest rate cuts. Then he went on to further say that the robust performance of the US economy and the limited progress in reducing inflation this year has not been very successful. And he went on to stress that reaching the 2% inflation target will take longer than initially anticipated. Now, the prospect of higher interest rate is likely going to diminish following, the prospect for an interest rate cut is going to reduce or diminish due to this hawkish remark from the Federal Reserve Chair. Now, it is expected that when interest rate is kept higher, the chances that safe haven assets like gold will likely drop, as market participants will want to move their capital to benefit from the interest rate on the US dollar. Now, in as much as this is a theoretical understanding, we cannot ignore the factors, the effect of the geopolitical tensions in the Middle East on safe haven assets. We know when there is a turmoil, when there's a geopolitical tension, the appeal for safe haven assets such as gold usually increases. And in the last 3 months, we learned that economies such as China, Kazakhstan, India, Russia, and major Eastern Eastern European countries have been investing in gold, increasing their gold reserve tremendously in the last 3 months, and this is one of the reasons why the price of gold keep escalating. And in fact, the strength of the US dollar does not reflect here in the gold market. So in that regard, the path of least resistance for gold is still looking very, very bullish, and for the fact that price action is still trading above our ascending trend line, we have no business selling the gold assets today. So if price continues to remain above this ascending trend line, we shall continue to look out for patterns and structures that support more opportunities to buy. So currently we have a buy position triggered at the $2,388 level. I hope you did capitalize on that one. Let's see how far this momentum is going to go, and I will be updating us with new levels to capitalize or maximize on this potential bullish move as events unfold. Now remember that we're looking forward to some speeches, some handful of speeches from both the United States and the United Kingdom, and the speeches today may likely give some fresh impetus into this market. Now, depending on what this officials say today, will give the market some insight, and then we could see some setups and patterns to guide our decisions today. And if you are going to be part of the XAUUSD live window, you will have the privilege of seeing in real time how we will be managing these positions as we run it. So in as much as we're looking out for buying opportunities here, if price at any point in time today breaks down this ascending trend line and we see any form of retest of structure where we notice that buyers are finding it difficult to climb back above the ascending trend line, which obviously will reflect on the chart as continuous selling pressure below the ascending trend line, then we could start considering selling this asset, where we look out for more opportunities to sell, have a breakdown of the $2,346.50 level and the $2,335 area. So that's the only condition that will make us consider selling this asset today, but I doubt if it will happen. But if it does happen, let's be on standby to capitalize on that move. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. And if you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I do encourage us all to mark out these levels accordingly, and I will be taking the next 10 to 15 seconds off to see if there are any questions before we round off today's Forex Morning Mastery. And I also want to state that the XAUUSD live monitoring window is going to come up live today, 5 minutes into the New York session, and I do look forward to seeing you guys there. On Monday we were able to significantly gain some profit. Let's see if we can replicate that today. And for those who don't know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstarts about 5 to 10 minutes into the New York session and lasts about 5 to 7 hours depending on the volume of trading activities for that particular day. So I look forward to seeing you all in the comment section of that session. And for those who are clicking on the like button, I really appreciate from the bottom of my heart. Thank you very much for supporting the channel. And for those who are yet to click on the like button, please do. This is the cheapest way. It doesn't cost anything. This cheapest way you can actually support this community to grow. We have over 12 people on board, and let's make the like tally with the number of people on board. And thank you very much as you do so. So we shall be waiting for the next 10 seconds. Let's see if there are any questions before we round off on today's Forex Morning Mastery. So I see a comment here, C40, saying that what do you, when you say secure positions, you mean taking some profit? Of course, that's what I mean. Secure your position. So when price action moves in your favor and you have the privilege of running in profit, you want to secure some profit, and let's see if the market will continue in that particular direction. And if it gets taken out, we know that we will be taken out with at least some profit, or at a worst case scenario, break even. I hope I answered that, C40. And Krishna says gold is bullish, but any chance to reversal? Of course, I did explain that earlier. I hope you dropped your message before I mentioned the reversal setup. So I did mention here that the ascending trend line we have here will continue to guide our trading activity for the later part of the week. And you know how we use our ascending trend line. As long as price action remains above the trend line, we maintain a bullish bias, and the only condition that will make us sell the XAUUSD today is for both the ascending trend line and the $2,372 level broken to the downside. And I did mention that we would like to see signs that buyers are losing the same steam, which will reflect on the chart as continuous selling pressure below the ascending trend line before we can now continue the downtrend move. And I did show us some couple of levels here, like the 2000 if price action ever breaks down those levels. So that is my, I hope that was clear. Was that Krishna? And C40, thank you very much for the support. C40, thank you very much. Ayo Akombi, well, thank you very much for the compliment. I really do appreciate that. I do hope you've clicked on the like button. Very, very important. It's very, very important for me, as it also helps the YouTube algorithm promote the video to a wider audience of traders today. I see your comment, Ayo Akombi. In as much as I don't like to be a signal service provider here on this platform, well, your entry point, your TP target and your stop losses as expected to be subjective, in the sense that depending on the kind of trader you have, we know we have various type of traders amongst us here. We have day traders, we have scalpers, we have swing traders, we have positional traders. So depending on who you are will determine where your TP target or your stop loss will be, and depending on the time frame which you are trading from. Personally, I would suggest that you use higher highs and higher lower lows to guide these moves. Now, the highest point so far on the XAUUSD happens to be the $2,431.50 level. That is the highest point, at least in recent time, and that could probably guide your TP target. But personally, I usually like to extend my TP target to unprecedented highs, so that if price breaks out the structure and move further than that, I move my stop loss into this area, secure all those positions along this high, and if price continues further, then I could maximize on the bullish move. So I think I'm able to answer your question there, Ayo Akombi. So in the absence of no further questions, I guess we have come to the end of the Forex Morning Mastery today. It has been a wonderful moment with you guys. I really appreciate the energy, your comments, your engagement so far has been tremendous. Thank you very much. I really appreciate that. And though I'm yet to see the likes tally with the number of people on board, please, if you are yet to click on the like button and you have found this content helpful and useful in making your independent trading decision, please, why not give the video a thumbs up? So it's on this note we have come to the end of today's Forex Morning Mastery, and so far today we were able to attend to all of the financial instruments on our watch list, which includes the GBPUSD, the USOILSPOT, and my favorite amongst them all, the XAUUSD. And so far throughout the session we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So I do hope you all marked out these levels accordingly on your chart. If you have done so, well done to you. So all we just need to do now is exercise patience and allow the structure to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. Now, to attend to the fact that we have not done really well this week, of course I can understand that. The USOILSPOT is still struggling to gain some traction. The GBPUSD, we had a stop loss on the GBPUSD on Monday, and currently we have a buy position triggered, which is still struggling to also gain traction. It's only the XAUUSD that has been doing very well. It's okay, it's still fine. The week is still, we are still in day 3 of the week. We still have Thursdays and Friday, which usually comes with volatility, and I'm of the opinion that we still have enough time to recoup the loss we incurred and in fact made some more profit on top of it. So I understand this. I also want you to understand this. Stay faithful with the analytical approach, and let's see what the week will present to us, and we always be on standby to capitalize on whatever opportunity the market gives. Now, for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will make you be able to make your own independent trading decisions based on the knowledge you gather from this community. So I look forward to seeing more of you same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the last trading day of the week, which promises to be another exciting one, as market participants will be rounding off their trading activities ahead of the weekend. So I look forward to seeing you all then. Until then, I wish you the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.